Welcome back. I'm Pratap here. Today is 13th January 2025. In this video, let us evaluate the performance of high liquidity zones generated in our previous end of the day report. Even before that, all of you please understand we are providing complete free training on supply demand zone price action. You might be knowing the cost of the training is over 8,000 US dollars, and we are providing complete free training. All the training lessons can be accessible at our NeoStock YouTube channel. At our channel homepage, please click on the tab Posts. Some of you might be seeing the tab Community. Click on the tab. You get access to our free training course. This post is having a YouTube playlist link that will take you to all the training lessons. You just click on the link. Now we are into the playlist Supply Demand Zone Price Action course. Here you have all the training lessons are available. You just need to scroll down to the bottom of the page. Here, starting from lesson 1.1, all the lessons are placed in an order. So please go through all these lessons one by one and strengthen your skills related to supply demand zone price action. I have also provided the link to our Telegram channel in this video description. Please join at our Telegram channel. It will be helpful to you. Now let's get into the analysis discussion. I already analyzed all these zones, and you might have seen this for educational purpose as part of lesson 29.1. But today is going to be, or happen to be, another Black Monday. We have seen a Black Monday last week. It seems to be like January month Mondays are terrible. See the bloodbath on Monday. All zones are violated. Last Monday, see here, on 6th January, last Monday, all zones are stopped out. Same thing happened today also. It's an unlucky day for HLQ zone traders, but we have to accept this. This is the first time we have seen such kind of scenario. Within a month, having a crash continuously 2 Mondays, all trades are stopped out. But we have to accept. Because all these last 15 months, we've been enjoyed the profits. But sometimes we may get a hit. It seems to be like this January month is not a good month for HLQ zone traders. But remaining days we got good trades. Even though few stopped out trades, but on a overall we got good trades. But only this Monday and last Monday, all the trades were stopped out. And my bad luck, I analyzed the stocks as part of our training lessons to make use of our HLQ zone traders how to analyze the stocks. It happened to be today all the zones are stopped out. But one very unlucky stock, otherwise we would have got a very good profit until this 15 minutes target zone. Narrowly it stopped out. See here, the blue color line I have drawn is the stop buffer value. A little value below the stop buffer and then sharply moved up. Rarely you see such kind of situations. I remember previously couple of times you have seen. Recently also one of the stocks you have seen just touched the stop buffer, went little below, and immediately prices reversed and reached the target. But before that you would have exited your trade. You might have missed all this profit. If this would not have happened, this could have been a good trade for us today. But we have to accept the loss. And what about this? Well, there is one more zone. This is the zone already a tested zone, and this is a lower time frame zone horizon to the 75 minutes fine-tuned zone. You know that Angel 1 is a daily high liquidity zone. I am not analyzing these stocks directly checking the performance because already we analyzed all these zones in our lesson 29.1 yesterday. See here you have a 5-minute zone here. You have 1, 2, 3, 4, 5 base candles rally, and this is tested several times. And then from this zone, this is a 75-minute zone, fine-tuned 75-minute zone inside the daily zone. From here again it picked up the orders, moved up. See here in this candle again prices came, picked up the orders, moved up. If anybody would have taken a trade in this zone again today, your trade would have been stopped out. But the zone's point of view, already it is a successful trade because it has a one successful trade from this zone. Minimum one successful, it is a successful zone. But what is the rule of HLQ zones or lower time frame zone horizon? Until the zone will be violated, we never know when the zone will be violated. We keep on taking the profits, and the day when it is violated, we just ignore that loss because that is a minimal loss compared to all the earlier profits. If any of you would have taken a trade, it is definitely a stopped out trade. But this is a fresh zone, a fine-tuned 5-minute zone. The second order flow. This is the one we discussed yesterday. This is drop base rally, but this is the area we have the balance has taken place, the institutional order flow. But it's a very, very bad luck in this stock. Just narrowly it is pierced. Because it is pierced, stop buffer. I'm talking about the stop buffer. If the zone is slightly pierced, okay, if it is within stop buffer, we consider it is a successful trade. But stop buffer is also slightly crossed. Even pi paisa prices went below stop buffer. We consider that's a failure, that's a failed trade. So that's why Angel 1 has given a loss 1,620 rupees loss because it is stopped out, and it is a 1% negative ROI as per one futures margin cost, on our margin cost. So all these stocks are within our stop buffer limits only because we can't take risk beyond 2%. So this is okay, fine. Next one is Bosch. This is all the stocks we discussed yesterday in lesson 29.1. Bosch is also the same case. But compared to the earlier one, it is a clear stop down. Earlier one is really a painful stock because we missed a huge profit. But that is not the case with Bosch. Of course, it is stopped out and again turned, moved a little bit up, and remaining day it was moving here only. So how much loss it has given? This is, I am showing you directly all the 5 minutes fine-tuned zones. How we fine-tuned all these zones you can find in our yesterday lesson 29.1 video. Unfortunately, lesson 29.1, I am keeping all the zones that are violated. We have all these days profitable zones, but when it comes to the main lesson, we have a lesson with all stopped out trades. So very pity. Anyway, fine. So Bosch has given 1,842 rupees loss, which is 1.3% negative ROI. Next one is Jubilant Food. This is also high liquidity zone. See here, I have drawn a blue color line where the entry. This is having order flow. Yesterday we have a doubtful about this order flow. Drop, base, rally, because I am not convinced with this base candle. Even if I draw drop, base, rally, this is already tested. That's why what we did, we looked for this drop, base, rally. This is the lower time frame zone as an horizon to the higher time frame zone. Here you take, and this is the one stopped out today. Slowly consumed because today supply is such a strong. But if you would have noticed in all these stocks, stopped out trades, After it is violated, prices were slightly moving up. Why? One reason is it's almost closing hour of the market. See, when it is stopped out all these zones, around 2 o'clock or 2:30, last 1 hour of the trading session. I know most of the intraday traders would not have taken these trades. Last 1 hour, you would not have taken the trades. But still, zones point of view, they are violated. So that's why I'm measuring all these statistics. But my question is, why all these stocks stopped their crash after they violated these fine-tuned zones? See, Angel One, same is the case. Okay, it is slightly pierced. That is a different story. But this is happened when it is happened 2 o'clock 35 minutes. Last 1 hour of the trading session, it happened. Intraday traders mostly would not have taken these trades. But still, zones point of view, it is violated. But why it stopped here and started moving up? Again, Bosch, it is an important question. Everybody please think about it. Why? It stopped after slightly violated the zone. Same is the case Bosch. See, it's violated. A little below it came, but still, why the crash is stopped? Why again prices were started moving, even it is not significant. Why not significant? Because almost closing hour of the market. Same is the case with Jubilant Food. Why after these fine-tuned zones in the high liquidity zones only? See, until then, market was falling down. And finally, after it is slightly pierced or slightly violated, then again the crash is stopped. Why no further moving down? In all these stocks, the simple reason is these are the HLQ zones. The fine-tuned 5-minute zones are having a huge institutional order flow. When they are having huge institutional order flow, why prices are not moved up? Why after it is violated only there was some movement? Maybe a little movement or a big movement. Angel One, you have seen a big movement. In the remaining stocks, a little movement, small movement, Bosch and even in Jubilant Foods. What could be the reason? The reason is today's supply is very, very strong. Do you remember I gave you a clue? When I released my supply demand zone software generated report on Friday to all the members at our channel, I made a comment even in our Telegram channel. I put a message. Look into the newly created weekly zones. You will be surprised, I told you. I don't know how many of you seriously took that note and looked into the zones. There were over 80 stocks. New supply zones are created. Out of these 230 FNO stocks, and majority of those stocks are Nifty 50 stocks are there. What is the significance of weekly supply zone creation, new supply zone creation? It indicates a new heavy institutional order flow is added into all those stocks. When a new institutional order flow, continuation to the zone this week, what will happen? Prices definitely will further go down. When prices are further going down, what will happen? Because the supply zone is created from, new supply zones are created from weekly time frame. That means the impact will be there at some extent on the daily zones. See, there could be 100 reasons why market is falling. But our price action clues, our supply demand zones, clearly reflects on their charts. So Friday it reflected as a new supply zone creations on weekly time frame. Continuation to that, Today we have seen a fall in the market. As part of that, even our high liquidity zones also faced that effect. Generally, we have seen, many times we have seen, on a bearish day, our high liquidity zones gave good profits. Who are following our HLQ zones for the last 4-5 months, you are aware of that. Bearish day, our high liquidity zones worked very well. Even some videos also added in our important analysis and playlist by keeping the heading on a bearish day. Performance of high liquidity zones. They gave good profit, 6% ROA, 7% ROA on a bearish day. But today is a bearish day. But we have seen HLQ zones, all the zones are impacted. So one reason is the overall market, the supply has been increased. So HLQ zones also faced the problem. Because the zones are having strong institutional order flow, what they did, they consumed all the demand. See, it consumed, all the supply. The moment prices entered into this zone, so it was slowly consuming. This is the fine-tuned 15-minute zone. In the 15-minute zone, first it pushed the prices. Of course, here we have fine-tuned 5-minute zone. But this push is not good enough. Why? Because the supply is very strong. There is a fight between demand and supply. See, the fight is taking place. That's why slowly the supply is consuming the demand, slowly. Demand is also strong. It is fighting with the supply. That means bulls or bears are fighting. And finally, by the time prices reaches here, bears, of course, in this institutional order flow area, that is demand area, entire thing is consumed. Now supply is also weakened because all the supply has been consumed by this fine-tuned demand area. And because this is the demand area, once the supply is over, what will happen? Definitely you see some movement in the price. That is what you have seen in Jubilant Food. That is what you have seen in Bosch, some movement. And that is what you have seen in Angel 1. But this is a big move compared to the remaining two stocks. But in this process, our bad luck is our fine-tuned zones are violated. Because they are violated, obviously, because they are stopped out, obviously, your stop loss will hit. So we have to accept that loss. But luckily, at least, sometimes we say, some good in bad, we say generally we have a proverb, right? At least some good we have seen in the bad. So all these trades happened in the last 1 hour of the market. Last 1 hour, most of the times intraday traders, we close all our trades by this time. Okay, HLQ zones performance is hit. But your individual trades point of view, at least the majority of the people would not have taken these trades. See, by the time when price entered into the zone, what is the time? 2:30. And Bosch, you see, by the time it entered into the fine-tuned area, 2 o'clock 5 minutes. Last 1.5 hours. This is the candle, first it hit. After that, it pushed the prices unto 5-minute zone, it is pushed. I told you last 1 hour or 1.5 hours, if anybody is planning trades, you have to plan only in the 5 minutes targets only. So you have to exit. But this candle is not completed. Probably you might have kept your target like this. This is a drop, 3 base candles and drop. By the time when you take the trade, this candle is not completed. So technically your target is, let me draw a horizontal line. Technically your target will be this. But once this candle is closed, your target, you have to revise your target. So what is your target? New target, this is your new target. Whether you achieve RR or not, you don't care. It reached the target, you exit. Whatever the profit, you enjoy that profit. So technically you got the profit if you would have taken the intraday trade during last 1.5 hour market. Several times I told you last 1 hour, 1.5 hour, if anybody is planning trades, your target should be on 5 minutes. Rarely you see, it will reach even 15 minutes target, rarely. But at least 5 minutes target, you have to exit here. That means it gave you an exit for you. It provided an opportunity to exit your trade. Because this is at 2 o'clock 5 minutes, that means last 1.5 hour trade. Because you don't have enough time to push the market up to 15 minutes target. Where is the 15 minutes target here? Somewhere here you have drop, base, drop. This is our 15 minutes target. This is only follow through candle. It is almost impossible to reach up to this line. So that's why those who have taken trade at 5 minutes, you would have exited here. Still you gain some profit, a small profit. Maybe you would not have got 1:3 RR. Because during your trade plan, this is our target. From here to here, definitely you have more than 1:3 RR. Because the target is changed during the live market, immediately you revise your target from this blue color line to this newly drawn blue color line. Why here you have a drop, base, drop? Why we didn't consider our target? Because when prices are entered into this zone, this candle is not completed. Many times what will happen? You get an entry, sharply it will move up. And there won't be any leg out, proper leg out, because it is going to be a failed ERC candle. But that didn't happen today. The moment the price is closed here, immediately a new zone is confirmed, drop, base, drop. This is an indication, a strong institutional order flow here. See, that's why prices, the moment entered into this newly created drop, base, drop, see again how it pushed the prices down. This time this entire zone is violated. This is how you have to analyze your stocks. Okay, anyway, if you don't take last 1 or 1.5 hour trade, no issues. But anybody would have taken, you got an exit criteria here. Sorry, Zobliant Foods. And when this one is entered into the zone, this is also at 2 o'clock 5 minutes. So all these are all happened during last 1.5 hour of the market. That way you might not have taken the trades mostly, I'm hoping. If at all your trade is really stopped out, that is the Dalmia Bharat. Why Dalmia Bharat? Because this is a clear stopped out trade during the early session of the market itself. So let me open the Dalmia Bharat 5 minute zone. This is a supply zone. But interestingly, another observation also we will see. So this is the one. We have a drop, base, hidden body drop, and this is already tested. That means picked up the orders. This is the 15 minute zone, fine-tuned 15 minute zone, picked up the orders, and then again prices came. So it gives an opportunity for us to take a trade. So initially, the prices entered into the zone. At least some movement it has given towards the down, but there is not a good enough push. Because maybe morning, even the market is down in this stock, some demand was there, again pushed the market. This blue color line area, stop buffer. See, the prices went a little above. That way your trade is stopped out. After that, clear stopped out because prices even further moved up and came down. Here one bad luck for us is, I don't know, I'm not understanding whether I made any mistake while analyzing this stock. We have a rally base. The reason why we didn't consider this one is, this is not a fine-tuned zone, but today it worked very well. The reason why we didn't consider in our analysis this rally base drop, one is leg out, I am not really fully convinced. Second thing, this is not a fine-tuned zone. And we don't have any price action clues also to plan aggressive trade. But today this zone worked very well. Pushed the market, see. Generally, we might be thinking how I missed this trade or how I missed this zone. Otherwise, we would have got a good profit. That is the way we will be thinking. But we can't go away from our rules, ground rules. Maybe today it is a lucky. It looks like a unlucky zone for us because we didn't track. But every time such kind of zones will easily violate. You may say today first price action clue has given in the market in the morning. This zone is violated. Prices came near to this zone, came down. We have a price action clue. Based on this price action clue, if we would have taken a trade, we would have got a good profit. Maybe if anybody has taken a dynamic decision in the live market by observing this price action clue, then it could have been a good trade for you. But anyway, yesterday when we analyzed, we don't have any clues to plan this rally-based drop. So that is the reason why our focus is only on this. Moreover, this is a LTF zone, lower time frame zone as an horizon. Okay, after prices came down, is it the first attempt? Yes, this is the first attempt. If first attempt is successful, second attempt failed, maybe today or maybe in the coming future, then we would not have considered this zone as a stopped out for our statistics calculations point of view. If anybody individuals taken a trade, yes, it is a stopped out trade for you. But HLQ zone's performance point of view, at least one successful test should be there to consider the zone as a successful. The next stopped out trades not to consider. They are not really, to consider this fine-tuned zone is a failed trade. If one time it is successful test, second time, third time, when it is giving success, we will consider. But the day when it is failed, that stopped out trade, why we are not considering? Because compared to the earlier success trade, this stopped out is negligible for us. By the time already this zone proved and gave you a good test. But that didn't happen today. Today, say first test itself, this zone is violated. Because first test itself is, what about this test, you may ask? This test is not a real test. This is picking the orders from the lower time frame horizon. That's why we won't consider this as a test. And this test ensured this zone is having a strong institutional order flow. Maybe it is having strong institutional order flow. Sometime it has given some resistance in this area, even though it slightly crossed the stop buffer. See, after that again prices came down. Then again moved on. Now this time a clear violation is there. But even then once again it came down, maybe because of this 5-minute zone, rally based drop and some follow through candle. Why we did not consider? Because it is not a fine-tuned zone. But this one is violated, right? That's why we have to put this as a stopped out trade. In our records, I have added this zone. So we got 1,279 rupees loss, which is minus 1.4% ROA. Meanwhile, Zubliant Foods has given 2,687 rupees loss, which is minus 1.6% ROA. All these zones, these are the problems we got. And it looks like two more trades are stopped out, but we don't consider them. One is IRCTC and another one is IPCL Lab. Why we don't consider? We have fine-tuned zones in both the stocks. Because market is opened with gap down. When market is opened with gap down and the order flow is completely out of the fine-tuned zone, we don't consider, because in the pre-market itself, that means before market open itself, we know that institutions cancel their order flows in those areas. Why prices will, with a gap down, why they come out of the zone? Only when institutions cancel their institutional order flow. How do we know institutions cancelled? Because before market open itself, price opened below the fine-tuned demand zones. Let me show you. Previously, several times I explained this point to you. Why we don't take in morning exactly 9:15 candle, or why we don't place pre-market orders for, because these are the intraday trades. Intraday trades you can't keep pre-market orders because sometimes market open with gap down. See here, today market is opened with gap down. This is the morning. Go to the daily time frame, you will understand. Oh, daily time frame, it is not clear. This is a 75-minute zone, right? Yeah. Morning 9:15 candle. See, morning 9:15 open is below the zone. When it is opened below the zone, what does it indicate? Market is opened with gap down. When market opens with gap down, when there are no institutional order flows here, but we have a fine-tuned zone. Why we don't have a institutional orders here? Institutions might have cancelled their order flows. Why? What is the reason behind cancelling? Because they have some kind of news they might have got. See, today market was bearish, opened with gap down today. Maybe some news they might have got. They have their own analysis. See, we are technical analysis people. We don't bother about market news. We only observe the charts. By observing the chart, this stock is opened with gap down. When it is opened with gap down, what does it indication here? This entire order flow is gone. You know that entire order flow is gone. Again, keeping once prices moved up, keeping your order here, is it not a foolishness? Definitely, right? You won't place your order at all. So this is the reason why always in the intraday we never keep pre-market orders. Maybe all the experienced people are aware, but people, beginners, learning the stock markets concepts recently and observing the charts and practicing, for you these are all lessons. Why we should not keep pre-market orders. So we have such kind of huge risk will be there. So that's why IPCL have opened with a gap down below our zone. So this is not a valid trade at all for us point of view. Same is the case with IRB also. In IRB infra, market is opened with gap. See here. We have a fine-tuned 5-minute zone here. Below it opened. That means this fine-tuned order flow is gone. Why it is gone? Institutions cancelled. Otherwise, you know how strong these fine-tuned 5-minute zones are. So this is an indication to gap down below the zones or below the fine-tuned zones. It indicates institutions cancels their orders due to some reasons, their own reasons. Otherwise, these two also would have been stopped out. But we are lucky. Performance statistics point of view, of course trades point of view also, because the market opened with gap down below the fine-tuned zones or below the zones, we won't consider them in our performance evaluation point of view, because we know market market is having many times it is having the behavior to open with gap down or gap ups. At the times our zones might be violated if institutions cancels any of their order flows. If they did not cancel, you know what would have happened? Market would have happened inside this fine-tuned 5-minute zone. See, in this candle closed, it opened below, came down and then again pushed and closed inside. That is a different story. But open within the zone, many times you have seen, market opens in this fine-tuned area and then started moving up. That indicates the strength of this institutional order flow in this area. So that way IPCL Labs and IRB, we escaped because market, otherwise we would have got 2 more stopped out trades. And Dalmia Bharat, one interesting thing is, go to the 5 minutes time frame. See, this is the one analysis we did earlier. I have drawn this zone in the demand zone because in Dalmia Bharat, yesterday we discussed, this 75-minute zone is created inside the daily zone. This is a daily high liquidity zone. inside 75 minute zone is created. This daily zone I defined a bear trap. Not only bear trap, it is also a high liquidity zone. It could be. Please remember the day when I didn't exactly remember when we discussed. Most probably if I look into daily zone, I can tell you. Probably on 23rd December analysis video, we might have discussed this. That is one possibility. Or other possibilities, maybe, hopefully, either this or maybe on the next trading session, maybe 6th January. Refer one of those videos. And on that day, I might have explained you, because these are all the things already we have drawn. We didn't draw yesterday. Yesterday already these zones, these drawings were there in our charts. So last time in the analysis, I might have explained you this is a high liquidity zone. This 5 minute zone. Why? Because this is not only multi-testing, but each time when it is tested, new zones are getting created. See here, we have a rally base, rally is created, new order flows are added. And here again it is tested. While testing again, drop base rally is started. So that's why I told you this is the area you can again plan the trade. During this analysis discussion I told. That's why we kept this zone on the chart. And also I told you last time when this zone was created again, prices came very close, and then before just entering into the zone again they were started moving. That means a very strong institutional order flow. Not only that, again you see drop base rally is created. So definitely we can plan the trade next time when prices are entering into this zone. That was the trade plan when we discussed about this particular daily zone. And see today what happened. Today prices entered into this zone at 1355 candle and then started moving up, 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 up. And somewhere here might be having a zone. In this zone it closed. Do we have any 15-minute zone here? Yes. We have a drop base, a drop. See here? This is achieved. This 15-minute supply zone. This is at 1345, 15 minutes candle trade, or this is 1355 minutes. How sharply it moved. Definitely this is a good profit because we did the analysis earlier. And how we can take this trade, because this is a 5 minutes aggressive trade setup. Not only 5 minutes aggressive trade setup, this is also acting as a bear trap for this 75 minutes high liquidity zone. This is a 75 minutes high liquidity zone, which is a fine-tuned zone of the daily zone. Why we are saying 75 minutes high liquidity? This zone, 75 minute zone, also getting tested multiple times. Even if this 75 minute zone is not a high liquidity, still it is a fine-tuned 75 minute zone inside daily. Just below that, institutions keeping this trap. I have given this explanation. Remember, please refer the old video. That way this zone would have given you a good trade opportunity today. But anyway, my concentration is on yesterday's HLQ zones. But still, I'm telling you the trade opportunities you would have got is, this is the only one area among all these stocks we got. And anything there is one stock we discussed that is going to be violated, Naukri, right? We discussed Naukri will be violated because yesterday while analyzing, because it is not having a proper fine-tuned 5 minute zone. The 15 minute zone is there. It doesn't have proper 5 minute zone. it is having inside the zone we have a drop candle. The moment I hide this big candle, then we got a clear structure about this. See, this is a drop candle and then a rally candle. That's why yesterday I told you this zone will be violated mostly. 80% chances are there. Exactly the way we thought this zone is violated today. And any other stocks? State Bank of India. State Bank of India is the one narrowly again missed the trade. We have a fine-tuned zone. State Bank of India narrowly missed this trade. Otherwise, this could have been again another good trade for us. This is a high liquidity zone, and also the origin, this 5-minute zone, drop base rally is the origin for this is a 15 minutes fine-tuned zone. Not only that, in this 15 minutes fine-tuned, again drop base rally is created. Maybe this is also a LTF zone to lower time frame 5 minutes horizon to 15 minutes fine-tuned zone, and also this is also acting as a high liquidity zone because it is having the characteristics of creating new order flows within the zone again. Drop base rally, new order flows are created, and also this zone is also tested once after that. Already this is tested first time, second time also tested here. Tested means came very close with entry buffer. This trade you would have got and gave a very good move here. And today prices came very close to this area, but see here. But even if you add the entry, you would have slightly missed this trade, even by adding the entry. This is, but anyway, it happened last half an hour of the closing of the market, 14:40. That means last 50 minutes or last 55 minutes. We can say last 1 hour trade, this price action. See, this is a drop base drop. This 5-minute zone target is reached. But you can't take this trade because even by adding the 0.1%, you will be slightly missing this trade. That means this is only one fine-tuned zone is not violated today. At least it is looking strong. And we have this IRCTC is a supply zone. This is a daily supply zone. See, today we didn't get that. See, Friday it got a trade, sharply moved on. Continuation that further moved down. Today prices did not enter into this zone. So that way we have 4 stopped out trades. All the trades that entered into the zones, they are stopped out once the market is started. Because 2 stocks are with gap down, they are gone. We won't consider them. That's why I'm saying once the market is started, 4 zones entered into the fine-tuned zones, and all the 4 are stopped out. So this is about our HLQ zone analysis. Hope you all remember this Black Monday, because this is the second Monday in January. Last Monday and this Monday, we have seen all HLQ zones are just like that wiped out. So this is about today's HLQ zone analysis. Hope this information will be useful to you. Let's all meet again in our next video. Thank you.